Welcome, dear traders. You are watching a recap of the Asian session on August 2nd. Risk appetite declined markedly following the escalation of the trading war between the United States and China, as well as the unpleasant surprise from a Fitch rating. Asian stock markets kicked off a trading day with the losses due to mixed results on Wall Street yesterday. The main news for global stock markets and forex was the statement made by Fitch, one of the big three credit rating agencies. Fitch downgraded the US credit rating, citing fiscal deterioration over the next 3 years and repeated down the wire debt ceiling negotiations. The White House strongly disagreed with this decision. U.S. Treasury Secretary Janet Yellen called the rating arbitrarily and based on outdated data. White House Press Secretary Karine Jean-Pierre also made harsh comments. It defies reality to downgrade the United States at a moment when President Biden has delivered the strongest recovery of any major economy in the world, she stressed. There is a grain of truth in these complaints. The stability of the U.S. economy outlines the deterioration in the country's credit rating. Fresh U.S. reports have even confirmed some improvement in the manufacturing sector, boosting the U.S. dollar. In Asian trading, it tested a 3-week high of 102.25. However, the greenback somewhat slowed down, sliding into a bearish zone and dropping to 102.10. It's still unclear how the situation with the rating will affect the US dollar in the long term. It may even deter the Fed from the raising rates further. Therefore, the US dollar was trading very volatile in the range of 101.90 and 102.20 on early Wednesday. The yield of U.S. government bonds also fell because of the downgrade of the U.S. rating. It usually facilitates a rise in the Japanese currency, so in the Asian trade, the yen took advantage of the situation. In addition, the escalation of tensions between the United States and China has put some pressure on the risk assets, bolstering demand for the safe haven yen. As a result, the dollar-yen pair dipped to 142.5. It was slowly but surely sliding to the lower border of the intraday range of 142.40 and 143.30. The spot price fell by 0.3% after a breakout of the support level of 142.50. The pair needs to reach 140.90 as well as the psychologically important level of 140 to cement a downtrend. Although Bank of Japan Deputy Head Shinichi Uchida said that it's extremely important to maintain an ultra-loose policy, and markets still remember his hawkish comments, he warned that the central bank could revise its yield curve control policy. Now, there are plenty of reasons for such a decision. On a Wednesday morning, the yield of a 10-year Japanese government bonds increased to a 9-year high and exceeded 0.6%. The regulator immediately reacted to this. Shinichi Uchida noted that depending on how sharp the movements are, the regulator will intervene before the indicator reaches 1%. And China's economic recovery remains fragile. For example, the manufacturing PMI index for July fell to the lowest level since the start of the year. Apart from that, tensions between China and the United States are growing again. China announced restrictions on the export of drones and drone-related equipment to the United States in order to safeguard national security and interests. The United States is also contemplating broader restrictions on investments made in China. The threat of a trade war had a negative impact on the market sentiment in Asia. Besides, traders are tired of waiting for stimulus measures by Beijing to support the economy. For commodity currencies, this conflict is rather bearish. Internal reports also did not help the Australian dollar to recover, and the manufacturing PMI index has been contracting for the 15th month in a row. Given all the unfavorable factors, the Aussie dropped sharply. It broke through the support level of 0.6570 and reached a 4-week low. Spot prices slid to almost a 2-month low. A downward movement looks likely now, and the Aussie was moving in the range of 0.6565 and 0.6632. As a bearish pressure eased at the end of the Asian session, the Aussie somewhat stabilized at 0.6586. The US dollar has grown significantly against the commodity currencies today. The kiwi lost momentum due to weak domestic reports, and the unemployment rate in New Zealand rose more than expected in the second quarter. The economy is going through a technical recession. Therefore, the kiwi had no chance versus the used currency. It plunged in the Asian session, moving in the bearish corridor of 0.6093 and 0.6171. It has decreased for the second session in a row, trading at 0.6112. And that's all for now. Hit the subscribe button and stay up to date with the latest market news with us. See you soon.